Good afternoon and welcome to today's webinar and financial scan demo. My name is Scott Menzel and I'm a product manager here at GuideStar. Before we get started, I've got just a few housekeeping items. First, we're going to be live tweeting during today's presentation using the hashtag financial scan, so please join the conversation on Twitter. Secondly, we are happy to take questions from all of you during the presentation. We'll try to answer as many as we can before our time is up. To submit a question, you can use the Q&A feature at the bottom right-hand corner of your screen. If we can't get to all of your questions today, we'll post more of the answers on the GuideStar blog at trust.guidestar.org soon after this webinar. And finally, we will send all of you an email with a link to the presentation and today's recording in a few days. I'm now happy to introduce Peter Kramer, a National Advisory Services Manager at Nonprofit Finance Fund. Peter serves on NFF's National Consulting Team, supporting product development efforts and service delivery associated with their national initiatives and partnerships. Peter, take it away.
Hello, everyone, and thanks for joining us today to undertake some nonprofit financial analysis with Financial Scan. As Scott mentioned, I'm Peter Kramer, and I'm glad to be spending the next hour or so with you all on this webinar. Before we get started, let's take some time to look at how we'll spend our time together. So we'll start with an introduction to Financial Scan, looking at what it is, how it works, and what it can tell us. I'll briefly explain a few new features that we just launched at the end of 2013, and then we'll see them in action during a brief online tour of the data platform. To help bring 990 data to life and see what kind of information we can glean from looking at those tax returns and how that can inform an organization's decision-making, I'll then use Financial Scan to take us through a case analysis of a fictional organization, and we'll highlight some of the ways that this information is both useful and actionable for nonprofit leaders like yourselves and your peers. We'll then finish up, as Scott mentioned, with questions and answers in the final 10 minutes of the webinar. So let's get started. We believe that financial health provides a foundation on which a healthy nonprofit enterprise can be built in order to deliver high-quality programs that reflect an organization's mission and therefore ultimately provide solutions to individuals and communities in need. And good, clear financial data can play a role in this. It leads to better and more informed decision-making about how our organizations operate and deliver services. Financial Scan can contribute to financial health by providing clear, comprehensive data and a guide for interpreting it to help demystify some of the complexities of nonprofit finance. Moreover, it provides an accessible and common format that allows nonprofit leaders to engage with their staff, their boards, advisors, and funders in conversations about the recent financial past and how that's informing current and future resource needs. But this graphic that we just took a look at, that's the ideal, that step function from health to strong organizations, or financial health to strong organizations to quality programs and solutions. And that's what we aspire to, and that's what we do when the sector is functioning at its best. But there are challenges within our sector, and among them, nonprofit accounting is complex. The need for subsidy from third-party payers complicates the way that money moves and our business models function as nonprofits. Not to mention the deeply complex and challenging nature of the problems that we're collectively working to address in the social sector. All of these factors and others can create barriers to making that connection between financial health and effective solutions. At NFF, we take a financial angle on strategic issues, and in our work with nonprofits and funder clients across the country, some of the challenges that we hear and see regularly in our work are reflected here on the page. So starting with the first bullet, throughout the sector, there's been much focus on one-size-fits-all metrics like overhead rather than the vital signs of financial health. And you know, funder practices at times can actually reward keeping overhead very low and keeping infrastructure costs, which are essential for an organization, to a minimum. And actually, we're starting to see some shifts among the funder and intermediary communities away from overhead, including GuideStar's recent involvement in the campaign to debunk the overhead myth. And it's something that NFF has agreed with and advocated for many years. And instead, we want to focus nonprofit leaders, funders, and advisors on the leading indicators of comprehensive financial health. So nonprofits do need profits, right, to fund overhead, to survive, to thrive, really. And so we need, therefore, a more comprehensive look at an organization's entire financial picture to include things like profitability and liquidity and the health of the balance sheet. With regard to the second bullet, in client engagements and presentations and conversations with nonprofit leaders, I regularly hear from smart and passionate people who, when we talk about finance, excuse themselves from the conversation as not being a finance person, being a program person. And many people in the nonprofit sector are passionate champions of their respective causes, and rightly so, and may therefore not feel like they have the background, the financial expertise to help them navigate matters of strategic finance. But rather than fearing finance, we should own it. It's necessary in order to advance mission, and a more practiced and nuanced understanding of finance helps us make more informed decisions about strategy and programs. And then lastly, there's some often, some discomfort and uncertainty about discussing money, just generally, but also in the nonprofit sector. And this can be internally with staff, this can be with board members, it can be with nonprofit colleagues, it can be with our funders in the grantor-grantee dialogue. In fact, NFF annually conducts a State of the Sector survey, and in the data that comes back from that survey, this year's results, we had 5,000 nonprofit leaders from across the country telling us about their current practice and what's going on. And we ask a question about the level of comfort that nonprofit leaders have in discussing financial matters with their funders. And the data shows from that question that many financial topics feel uncomfortable between nonprofits and funders, especially those, oddly enough, that are essential for health, things like discussing building reserves or use of debt or cash flow needs, as opposed to things that might be a little bit riskier, like growing or facilities, which have some inherent risk in them. So knowing what to communicate about your organization's financial story and how doing so can be a real challenge, and not to mention the fact that connecting the recent past to the current resource needs can be difficult. So we've designed Financial Scan with these issues in mind, knowing what to look for and what to measure, looking for a way to clearly report analyses that are easy to interpret with a communication guide and common language as a reference point for financial conversations among all stakeholders in the nonprofit sector. So what is it? It's a data platform that was developed by NFF and GuideStar. At NFF, we've been underwriting nonprofit loans and advising organizations on matters of strategic finance for more than 30 years. And we combined our financial analysis expertise with GuideStar's unmatched access to nonprofit data. We designed Financial Scan to make the most out of what the 990 can offer by taking a sometimes unintuitive compliance document and applying an analytical filter to the data to make it more accessible and useful to nonprofit leaders and funders. The Financial Scan data platform lives on GuideStar's website, and it automatically pulls 990 data from GuideStar's databases for reports with just a few clicks. It's designed to give a multi-year perspective on nonprofit financial health, as well as an opportunity for side-by-side peer comparison. It's important to note here, too, that Scan is currently only able to pull data from the regular Form 990. So it does not include data from the Form 990EZ or the Form 990PF. The 990PF is that which is filed by private foundations, and there are just different fields on there that don't translate in the same way across with the regular Form 990. And also the 990EZ is the abbreviated tax return that nonprofit organizations with less than $250,000 in revenue are able to fill out and submit to the IRS. Because it's an abbreviated version, the fields, again, are not the same as the regular Form 990, and so we chose to focus instead on the regular Form 990, which many organizations do submit. In fact, there are over 350,000 organizations who are eligible for financial scan reports. It's important to note also that it is a paid service. There are two ways for organizations to access the analysis. For the nonprofit community, we designed the Nonprofit Express Pass, which is intended for those who might only need to run a report on your organization every 12 months, or as frequently as the data in your report would be updated. The Express Pass costs $250, and that $250 provides 7-day access and allows the user to run a report on a single organization, so your own organization, or you could, if you were a consultant who was working with an organization, you could select an organization. But during that 7-day period, you have a report on one organization, but you have the ability to compare as many peers to that organization as you would like. So you can generate during that 7-day period an unlimited amount of peer analyses, and we'll take a look at the different variations you can produce in just a few minutes. The other access option that we have beyond the Nonprofit Express Pass, that one which is $250 for one-time access, the annual subscription is intended for funders and institutions who might want to run many reports over the course of a year. An annual subscription for unlimited access costs $2,500 per user, and as I mentioned, does provide unlimited reports for those annual subscriptions. So what's in it? A quick overview before we then dive into looking at the tool itself. So we'll talk about the components, how folks are using it, and then we'll do a quick demo. As you can see, there are three main categories or content areas of the financial scan report. There's first the organizational dashboard, which shows 5 years, up to 5 years, of key financial trends and ratios across the income statement and balance sheet. There's also graphs and explanatory text, which map those trends more visually and provide a little bit more detail across these 5 different categories that you see on the income statement and balance sheet: expenses, revenue, profitability, the balance sheet, health and composition, and liquidity. And the final component is the peer comparison dashboard. This is really the benchmarking tool where a user can select individual organizations for comparison and also has the option to select a subsector that they define using criteria like geography or revenue, expense, assets, or mission area in order to define that subgroup that you can use for comparison in that feature. So these are all components of the financial scan report. The dashboards are available both online and in the final PDF report. That's the end result of generating these documents. The graphs and explanatory text are only available in the full PDF report. So a few different ways to access the data, and we'll look at it, as I mentioned, in just a second. A word, too, on how organizations and nonprofit leaders in particular are using Financial Scan. So it's been around for about 2 years now, and we've been getting feedback from our nonprofit users and our funder users and advisors who are using it. And nonprofit leaders tell us that they're using Financial Scan as a way to engage different audiences, whether that's internal staff or board members or funders on the outside, in conversations that are based in data, right? It provides a reference point that everyone can look at and interpret and discuss what have the dynamics been and what does that mean for today's needs. It also maps that story a little bit more visually using graphs and can provide that historical perspective and context that's useful in a budgeting process or maybe a strategic planning process in knowing where you've been to inform where the organization is going. And of course, organizations find it very helpful to be able to select individual peers or define a larger peer group in order to get a sense of the environment in which they're operating. What kind of other choices have other organizations made, or what does maybe that organization that we aspire to be more like look like? And some of those questions can be answered using a peer comparison. I'll spend just a minute to point out a couple of new features that we'll see when I go into the online demonstration next. But I wanted to put a word in on the Excel download feature, which we just added, so that the dashboards that you see in the report are exportable to Excel. So you can customize the information by either layering in program data or capacity data to give a sense of some of the non-financial activity over the period using, again, the Excel download and customizable nature of that feature. You could also add a more recent year. If you've filed your next tax return already and the IRS has not yet processed it and sent it to GuideStar to make it available in Financial Scan, if the more recent data were a priority for you, you would be able to enter that information into the Excel file to get a sense of what the most complete picture looks like. I mentioned also the new peer group comparison feature, so the ability to define the criteria for a subgroup, and we'll take a look at that in action in just 1 minute, but that's a new feature that we added to the peer comparison capabilities. And the 7-day access, it used to be that it was 48-hour access for the $250 price for nonprofits. We've extended that time for the same price to now just have longer access for that $250 Express Pass, 7 days. So with all of that context and all of that background on what it is and how we designed it and the thought that went into it, I'd love to share with you now the tool in action before we then take a look at a case example and look at some of the data and what kind of story it tells. So bear with me while I share my desktop. And you should see on your screen now the Financial Scan homepage. So as I mentioned, this is living on GuideStar's website. So you'll see up here at the top the GuideStar website with Financial Scan. And this welcome page is really the starting place for generating your report. As we move through each of the steps, you'll notice that the orange arrow moves across toward generating a report. And you can go back and forth as needed throughout the process if you want to change something. There's also some resources and links up at the top that can be helpful in answering questions as you go. But to start, for illustrative purposes, I'm going to look for a Boys and Girls Club. And I'll see my results here where all of the 8,000 results for Boys and Girls Clubs came up. I could filter if I wanted to narrow my results using these tools here on the right-hand side of the screen, but I see the one that I want right here. It's the Boys and Girls Club of Metro Denver, so I'm going to select that organization. And the first place that I arrive is the organization's financial health dashboard. So we've got some vital information up here at the top about who the organization is, including their mission. And we have the ability to generate a single-page PDF of just this page, this dashboard, or again, export this information to Excel for customization. We've also got a link here to some definitions and formulas that can help you see where are we deriving these numbers from and how are we calculating them, or what do we mean by membership dues or by investment income, for example. So you can see here that this organization has 5 years of data available, with the most recent year being their fiscal year 2012. And again, as I mentioned, it's organized by the income statement and balance sheet and these 5 different chapters of analysis. We've got some scroll overs that also pull up some context, some aspects to consider when looking at some signs of health and questions to consider for each of these different areas. So trying to, again, portray that comprehensive picture of health by looking not at a single indicator or something that's intended to be one size fits all, but really a more holistic look at the income statement and balance sheet and how it's changed over time. So here, just briefly, we can see that the organization has grown tremendously in terms of its expenses, that the revenue mix has changed a little bit in recent years, moving a little bit more towards some other income and some government grants. They've had consistent surpluses, which we measure on the balance sheet because the 990 commingles unrestricted and restricted revenue together as a standard practice. We wanted to make sure that we could show the unrestricted results because that's what's really free and available for an organization to use regardless of restriction within a given year. And so we measure it instead as the change in unrestricted net assets on the balance sheet. So that's a unique workaround that we built into Financial Scan, given what we know about nonprofit health and in nonprofit accounting. On the on the balance sheet, a number of different indicators here, some line items, but then also some percentages and ratios that give us a sense of what the key aspects of the balance sheet are in terms of fixed or liquid assets and liabilities. And then on months of cash, we can see that this organization has been steadily building their months of cash over time, although unrestricted liquid net assets have depleted just a little bit. So the next thing I'll do is, for the sake of time, move us through to the peer analysis, where again I'll look for other boys and girls clubs. And this time I'm going to use a filter on the side. I want to look at other organizations that are of a similar size, so I'm going to select $5 to $10 million. And I'm going to pick 5 individual peer organizations. And each of these 5 will appear in my report. So you don't have to select all 5, you can select up to 5, so fewer is fine. And the next piece then will be selecting a peer group. So this is where I can define a larger subset to compare in my comparables analysis. So in order to do that, we've included at the top some of the key information about the target organization, our original one, the Boys and Girls Club of Metro Denver that we selected, so we can see what size and what geography and what NTE code are a part of this. NTE codes, of course, being the classification system for mission subsectors that are a part of the IRS Form 990. It's a self-reported feature. So we can use this information to define our cohort. So I'm going to say that I want to look at all boys and girls clubs Okay. So there's boys clubs, girls clubs, and boys and girls clubs combined. So I'll select those 3 NTE codes. And I want to look again at revenue between 5 million and 10 million. I'm going to keep it open in terms of the geography, but if I wanted to, I could filter that also by city or state or metropolitan area. And when I hit search, it's going to return it's going to tell me how many results are a part of that broader subset. So 26 organizations match my criteria. And if I wanted to get a sense of who was in there, I could view a sample of who is in there, and it looks pretty good. It looks like who I would expect to see. So I'm going to use that peer group as a part of my analysis. And the results are going to appear on the dashboard as the median value for that group of 26. So that's how I'm going to be able to see how the Boys and Girls Club of Metro Denver compares to the median of that broader subset of 26 organizations. So here we are on the comparables analysis page, and at the top we have a key that helps us see which organization is in which column. We've got some abbreviated names, just given space considerations. And we can see a link to the most recent Form 990 that's available for the organization. And I also see my peer group criteria, what I just selected for my group of 26 organizations. I can see what's included here. And that orients me to the information that's below. So the Boys and Girls Club of Metro Denver, my target organization, appears in the far left-hand column. The individual peer comparisons appear to the right in each of these 5 columns. And then the peer median, or average in the case of revenue, indicators here refer back to all 6 of these organizations. These are the individual peers that we defined, and this median refers to those 6. The group median, or group average, refers to my subsector search. So those 26 organizations that we defined, the median values for that larger group are reflected here in this column. So we can see, for example, that of the median, my organization, the Club of Metro Denver, has a larger expense base than the median, and we can see that revenue corresponds to that as well. The mix of revenue is similar to individual organizations, but pretty different from the peer group. So you can get some of those kind of insights about what's the different composition, what kind of different choices have these other organizations made, looking at, of course, the most recent year of data that's available. So the last phase is then to generate the full report, and this is where the graphs come into the picture. So I've got my PDF report here, And all of the information that we've seen so far is included, so the financial health dashboard, but then also these 13 graphs that provide a little more detail. Looking at expenses, for example, there's a more detailed breakdown of expenses than appears on the dashboard. We look at full costs, what those estimations are for the organization and how they've changed over time, revenue composition, profitability here, and then a number of balance sheet graphs looking at composition of assets, how much of fixed assets is depreciated, liabilities, and so on. Composition of net assets, and here's liquidity. And then, of course, there's our peer comparison dashboard is included as well. So that is, in a quick nutshell, what the online interface looks like, how it works, the kind of functionality that you can expect to generate a report, to find organizations, to export to Excel if you like, and it's hopefully a quick sense of how the tool works. So the next piece of the presentation, I'd like to spend a little time doing a case analysis of what one particular organization looks like in Financial Scan and how that information might be used for their decision-making processes and conversations. So before we do that, I want to make just a few considerations in looking at our analysis of what 990 data can and cannot do. There are certainly benefits, and there are a few limitations to be aware of as well. So first, 990 data can help to very clearly illustrate the story, right? It's consistent data year over year and provides very good information, especially on the expense and balance sheet sides of the income statement and the balance sheet. The other benefit of it is that it's standardized, so it provides the platform by which you can compare organizations in a more apples-to-apples orientation, as opposed to looking at audits where everything is more customized, more nuanced, not exactly the same line-by-line comparison. That's available using Form 990 data. On the limitation side, with filing the tax returns and with the information getting from the IRS to GuideStar, GuideStar can then digitize that data typically within 30 to 60 days. But because of those lags, also organizations have up to 5 months after the close of their fiscal year to file with the IRS. So there can be a lapse in time before the data is refreshed. And because of that, 990 data can't provide that most current look that could be provided by, say, a budget or even a more recent audit. And speaking of audits, the data isn't necessarily going to tie exactly to the data in the audits that you might be used to seeing because, again, it's a standardized format versus a customized one. But in general, the large line items, the totals, should be close. In terms of total expenses, total revenue, or looking at net assets or liabilities, you would expect those to be closer. As I mentioned earlier, 990 data cannot show revenue restrictions. It's a limitation of the format where permanently, temporarily, and unrestricted dollars are all in the same stream in terms of the way you report it on the revenue side of the 990. And lastly, the Form 990 does not have a place for organizations to distinguish between operating dollars and capital dollars. So if you have a capital campaign, it's all going to show up as the same revenue, not as distinct from the regular operations of the organization. So a few pieces to keep in mind of what the 990 data can and cannot tell. So with that in our heads, let's go ahead and meet our case example organization, which we're calling Real World Skills. So this is an organization that prepares underserved youth for lasting careers and self-sufficiency. As you can see, they provide some programs in personal and professional skill building. They have summer internships, trade programs, certifications, and they've had steady yet modest growth over the last few years. They have a new location, but they've got some pretty dated equipment, and they're beginning a strategic planning process. So with those pieces in mind, I'll say a little bit more about some of the rest of their background. The organization has been in existence for more than 20 years, serving youth between the ages of 16 and 22, and though they've built up a strong reputation as a key workforce development organization and youth-serving organization in their community, some feel that the organization has become somewhat complacent. In 2009, Real World Skills moved to a new office space to reduce obligations to fund leasehold improvements in their prior rented space. Though the organization is well respected and financially stable, they have not been able to invest in infrastructure. Computers and equipment for job training programs are old and have fallen behind the standards of many employers with whom Real World Skills has relationships. A new executive director joined Real World Skills in 2010 and seeks to reinvigorate the organization. Without refreshing the organization's approach to workforce development and job training, senior leadership fears that the organization's core programs risk obsolescence. This year, they're embarking on a strategic planning process and are reviewing a financial scan report as part of an early phase in that process to take stock of where the organization has recently been. So what did they see when they turned to their financial scan report? So this screenshot captures the income statement portion of RWS's multi-year dashboard, again, organized by those chapters of analyses. So what we see, right, is, as I had mentioned, some steady growth in their expenses. So moving from $4.2 million steadily upward to $4.9 million in 2012. We can see the growth rate for each of the years that they've had, always positive, always relatively modest with the exception of 2010. Personnel has grown as well, but looking then on the revenue sources side, we see a fairly consistent mix. So reliable income streams that have been supporting this growth over the period, looking at government grants, a modest amount of grants and contributions, but a sizable amount of program service revenue. So those might be the relationships that they have with employers. It's gone down just a little bit, but remains right around 50%. On the profitability side, we see that the organization has generally been consistent in raising surpluses. 2009 was a bad year for a lot of people, given that it may have fallen sometime very close to the 2008 financial crisis, just depending on where their fiscal year lined up. But in all, they appear to have withstood the potentially destabilizing risks of growth and have operated pretty close to break even over the period. On the balance sheet side, we see, apart from a dip in 2010 in cash, they've had pretty level cash levels, pretty level cash amounts here. And between 2008 and 2009, we see this change in LBE, land, buildings, and equipment, which represents that move from a space with leasehold improvements to new space. They may have kept their equipment, but they no longer have those leasehold improvements sitting on their balance sheet. So that represents maybe that decline, which then picks back up a little bit from some new investments. We see also that the organization has depreciation of about 22%, or I'm sorry, of about 80% of their fixed assets are now depreciated here in 2012. And those high levels of depreciation suggest that dated equipment that we talked about, and the steady, then unrestricted net assets, again reflective of the cash position of the organization and the relatively consistent break-even, if not a little better, performance. And on the liquidity side, it's again steady, but it's constrained. It's having 1.8 months of cash or 1.5 months of cash. It doesn't necessarily provide them with the kind of operating cushion that they might like. Without that cushion, they might think twice before investing in new equipment and computers for programs or pursuing new opportunities as might be mandated in the strategic plan that they're embarking on, because that involves risk, and without the dollars to absorb some of that risk, it might feel a little bit more difficult. This peer comparison is probably a little difficult to read on your screen. I had to condense it down for size, but I'll give you the highlights just through what's here. The organization selected 5 individual organizations that they know are similar and do similar kind of work in their state. Those are organizations 2 through 6 here. And then they chose a larger subset that represents groups with the NTE code J, which represents employment and job training related organizations. So the group is organizations between $2 and $6 million in expenses and comprises over 320 organizations. So their financial situation appears to be relatively consistent with their peer group. Expenses are similar, revenue mix is also quite similar, though it doesn't have it does have a little bit more program service revenue and a little less government grants than many of their local peers, which could be a potential advantage for them, that they have different relationships and different sources of income that might be more stable potentially, as we've seen from their historical look. They do have considerably more cash than their peers, looking down here in the navy blue section, with about $600,000 in cash versus many other organizations with around a peer median of $400,000 and the group median of about $400,000 as well. So even though the cushion doesn't feel like a lot, it's maybe more than others have, and so that might lead them to think a little bit differently about risk. They also don't have the risk of owning their own facility and needing to care for the repairs and replacements of that facility, whereas many others have a lot more property and equipment as compared to real-world skills. Liquidity is similarly constrained across all of their peers. So, it's not a symptom of just the organization, but the field itself is somewhat liquidity constrained. So we'll take a look at 2 graphs from their 13, but I wanted to just mention, as we had seen in the downloaded version, that there are a number of different areas that are covered in the graphs. So this just gives you a sense of what the highlights are. We're not going to go through each of these, but just wanted to provide a sense of what kind of graphs and narrative you can expect to see in a full financial scan report. So this graph shows the change in unrestricted net assets before and after depreciation, which is, as many of you know, a non-cash expense that represents the loss in accounting value of fixed assets over time. Because it's a non-cash expense, we want to show the performance both with it included and without, to get a sense of what the real true performance is in terms of operations. The data labels that you see here calculate the size of the surplus or deficit as a % of total expenses. So while the organization has been successful at managing incremental growth over the last several years, it's worth leadership reflecting on this question, especially in light of the changes that new leadership and a new strategic plan could bring to the organization. This question being, they've had some recent surpluses, but are they adequate to build financial resilience? It was a 0.2%, 0.9% surplus, really giving the kind of ability to build those reserves that will allow them to respond to new opportunities and take some bold action as a part of their strategic planning process. That's something that certainly needs to be considered. On the liquidity side, there's no right amount of liquidity. It depends so much on many different factors, including the reliability and timing of revenue sources, the stage of the organization's life cycle, its anticipated growth, or if they own fixed assets, what level of repairs and replacements are needed, and of course the economic environment. But with some minor fluctuations, the RWS's liquidity position appears to be pretty stable. But as we saw, it's been tight and has prevented the replacement of some equipment and computers, and some at the organization say it's stifled the ability to adapt and innovate its job training programs. So with that financial context in mind, what can the organization take away from a review of its financial scan report? So first, in terms of observations from Financial Scan, they've grown. They've got a reliable mix of revenue sources, and relative to peers, look pretty stable, have little fixed assets, so that's a potential advantage. But do have evidence right here that the tight liquidity can constrain their ability to innovate just based on the steady growth, but not being able to make any transformational changes over the last few years. So with all of that in mind, the group might then think, as a result of looking at this as they're going into their strategic planning process, about making business planning and really financial planning a strong component of strategy development, thinking, of course, about programs and impact, but also what kind of resources are needed to support that, and how can we use historical strengths like reliable revenue or surpluses in most years to help support that broader strategy development. The organization could also consider the amount and types of capital that are needed to build liquidity and adapt to the changing job market. So leading into the third point, which is to meet those resource needs and build reserves or a cash cushion that could help to innovate and adapt, use their data, their strategy as an opportunity to engage with funders about needs for building reserves and how they are fiscally strong, but where there's also a little bit of vulnerability and an opportunity for funders to support them in this next phase of the organization's development. So with that, we've taken a look through Financial Scan in terms of how we designed it, what it's for, how it actually works by going through the online environment, and then walking through a brief case study of how one organization might use it in their strategic planning process. So with about 15 minutes or so left, I'll now pause to ask Scott if any questions have come in that we could address in the final 10 or 15 minutes of our presentation.
Thanks, Peter. Just some basic questions that have come in thus far. The first one is around pricing. Just to remind all participants today of the pricing, the nonprofit version, the Express Pass variant of Financial Scan is $250, and that will allow you to run any number of peer analyses against your organization for a period of 7 days. And you can download any number of those reports in PDF format for reference whenever you like. And as Peter mentioned and showed you before, you can also download the analyses in Excel. So $250 for the Express Pass. Let's see. Another question is, I just addressed this, if the organization purchases the Express Pass each year, does the system save the reports? No, but you are, as I just mentioned, you're able to save the PDF reports for reference whenever you'd like. Do you need a GuideStar.org account? Do you need a GuideStar.org account to access Financial Scan? The answer is yes. For those of you that don't already have one, if you purchase the Express Pass on the GuideStar website, you can simply register for a free GuideStar account during the purchase process. Again, the account is free. It just to access the Financial Scan tool, we just need to credential you with a username and password, which comes with the account.
Scott, I see a question that came through just a moment ago asking where the observations and recommendations come from, if that is a component of the report. It's a great question, and it's not actually a part of the report, but a piece of either the nonprofit's reflection in looking at the report, conversations with boards of directors and with staff from looking at the data and coming to the conclusions that they might have. I'll also just shamelessly say that Nonprofit Finance Fund can, of course, help organizations interpret the reports, but we've designed it in a way to be intuitive, to have a guide as well that can help to make sense of the numbers. In short, the observations and recommendations are not that smart logic is not baked into the tool, but it's something that we've designed the tool to be as intuitive and user-friendly as possible. If there's more that could be used to help interpret and understand, NFF is certainly happy to answer questions.
Sure. Looking at a couple that are just now filtering in, Peter. Let's see. What standards and where do you find them are using to judge whether the org's liquidity, profitability, balance sheet health is good, fair, or poor? I think we're actually...
It's a good question. It's not something that's judged actually in financial scan. So my interpretation that you heard over the last few minutes is what the judge of, in this case, real world skills is liquidity being a little tight. There aren't really rules of thumb for exactly how much an organization needs in terms of liquidity, and SCAN is not designed to be a tool that rates or ranks organizations, but rather requires that that there's some amount of interpretation on the part of the user and some conversation really with leadership about the dynamics that are influencing sort of what's needed and how healthy the organization is. So we really did design it as a conversation point and as a way to bring data into conversations. So there's not a component that says this organization is in good health or this organization is in bad health. Some of the numbers that are negative might appear in red, which gives you the idea that that's probably not a good thing. But apart from that, there's not actually an assignment of whether an organization is in good or bad health. It's left up to the interpretation of the user.
Okay, another one here. Does the system intuitively exclude the target organization when you calculate the median?
Yeah, so in the peer median, it does not exclude it. It intentionally includes it because you're looking at the 5 peer organizations and the target organization. So it's the median value for the 6 organizations that have been individually selected. For the group median, and Scott, keep me honest here, for the group median, it's intended to cast a much wider net, and so it's likely that the target organization could actually be included in that broader group median.
Correct. That's right, Peter. Let's see. Looking through for some other...
I see another question, Scott, about the time frame for when 990s are posted.
Right.
I gave a little snapshot of that, but is there anything else you want to add to timing for when an organization has to file and when the data comes then into the IRS and to GuideStar?
Right. As almost everybody on the webinar, I'm sure that you guys know that the nonprofits can file extensions, with the IRS to file. So we kind of bake that in to the time that it takes digitized data to get into financial scan. It could be a year, 9 months to a year after the organization files. Once the IRS starts opening up the e-filed forms, the data for the e-filed forms, which they don't currently do, the e-filed forms go through a process by which they're essentially turned back into PDFs, and when GuideStar gets those, we have to digitize them. So once the IRS actually starts allowing the digitized data, opens that up, this process is going to get a lot shorter, and there will be more recent data within financial scan much quickly. So see a question about the links to the Forms 990 included in the dashboard, and you know, the answer there is yes. We have links to all 990s back to 2005 are included in the online dashboard, in both the financial health dashboard and the peer comparison dashboard. So those are there for you know, the convenience of the user. And I'm not seeing Peter, I don't know if you want to just kind of scan the queue. I'm not really seeing any other questions.
Yeah, it looks like we got to the other ones that I'm seeing here. So unless there's any last-minute ones that are going to come in, oh, I see one last one that did come in. Will the IRS be releasing the digitized files for GuideStar, and is there a time frame for that? Right.
No, we don't have a time frame for that, and I think that once the IRS opens the data, they're going to pretty much open it to everybody, not just GuideStar. And GuideStar is a proponent of that. I mean, this is public data. It needs to be out there. There has been some movement in the current administration to make that happen, but you know, we don't have really a timeline for that yet. The IRS hasn't released one.
I see one other question that just came in asking, can more ratios be included in the analysis? And so the immediate answer to that question is it's a standardized report at this point. So the content is fixed. Unfortunately, there's not an ability for you to pick and choose what information ends up in the financial scan report. You know, we've put a great deal of thought into the content and making sure that we could present as much information from the Form 990 to give a comprehensive analysis that also, you know, isn't totally overwhelming and still respects the principles of being a dashboard and making some choices about what actually goes in there. But over the longer term, you know, this is a tool that we've already done some iterating on in terms of developing new versions and making some changes to it. So if you have feedback or you have thoughts on any kind of changes that might make it even more useful and relevant for your organization, or if there's a particular metric that you'd like to see, please don't hesitate to email me or give me a call. I'm happy to take that feedback, and I know that that GuideStar is as well, so that we can make Financial Scan the best that it can be.
Okay. And I'm not seeing any other questions come through. So if that's the case, I think that we can probably close early. Peter, does that sound okay?
Yeah, I'll answer just the last question that I just saw, but then we can wrap it up just a few minutes early. Someone asked, is the data downloadable to Excel? Yes, it is downloadable to Excel. So you can use that raw data to, if you wanted to do a couple of additional ratios, you could calculate those. So absolutely available in Excel. So with that, I think we can call it a day, Scott.
Okay. Thanks a lot, Peter, for taking the time today. We really appreciate it, as always. To all the participants, please watch out for the email coming within the next couple of days with the presentation and the recording. And have a great day. Thank you for joining us.